Good morning. You're watching a home broadcast of Business World Live. I'm Danny Laurel. It's 10:30 a.m. this Wednesday morning in Manila. We are about an hour into the shortened trading day. Let's kick off with our top story. The country's debt rose to a record 8.6 trillion pesos. That's as of the end of April. That's as the national government obtained more foreign loans and issued additional domestic securities to bankroll its COVID-19 response. You can see on your screens here, the Bureau of Treasury said the figure was up nearly 1.5%. That's from 8.48 trillion pesos in March and up by 10% from 7.79 trillion recorded in April of 2019. Now, of the outstanding debt, 2/3 were sourced domestically, while the remaining 32% was from foreign sources. The Treasury said the increase was largely due to the issuance of government bonds, which rose by almost 1% month on month to 5.56 trillion pesos. External debt jumped more than 2.5% to 2.74 trillion pesos. Now, just in late March alone, the Bangko Sentral bought 300 billion worth of securities from the Treasury to boost the state coffers for efforts against COVID-19. For April, the net availment of external loans amounted to 8.7 billion pesos. In April, the Asian Development Bank approved a loan worth $1.5 billion to help the government's coronavirus response. The ADB has said this was the largest budget support loan it ever extended to the Philippines. Now, also in April, the World Bank approved $100 million in loans for the country to help meet the healthcare needs in the wake of the pandemic. Meanwhile, the country saw a thinner surplus in the balance of payments, or BOP, in the month of March. The BOP recorded a surplus for the second straight month at $448 million. That's lower than the $627 million in the same period of last year. RCBC's chief economist, Mike Ricafort, said the narrower surplus reflects the heavy hot money outflows, which reached $961 billion in March amid concerns about the pandemic. For ING's Nikki Mapa, the surplus was supported by a narrower trade deficit. The trade deficit in March hit $2.38 billion. It's smaller than $3.33 billion in the same month of last year. RCBC's Ricafort said bright spots may pop up with improved market reopening as the government loosens its restrictions and the economy gradually reopens. He said the net foreign portfolio investment outflows could ease in the coming months and the BOP could correspondingly improve. Now, just on the back of that, I want to direct your attention to my terminal here as I open our local currency because we haven't taken a check at the peso. You're going to be seeing here on my terminal how our currency has significantly strengthened, at least in the month of May. We're actually back towards 50 levels. We're trading at 50.223 to the greenback. So some of the lowest levels we have seen since the beginning of the year. Okay, so kicking off markets with a cross-border deal, some big news here. We're going to be watching Ayala Corporation very closely after its unit UAC Energy made a $535 million takeover bid for an Australian renewable energy company, Infigen, in cash. Okay, so you're going to be seeing on your screens here the terms of that bid. So that's around 80 Australian dollar cents per share for a total of 777 million Australian dollars. This share price is actually a 36% premium to the June 2 closing price. Now, what is the interest of Ayala Corporation here in this Infigen? Now, Infigen is a renewable energy company. It's actually one of the biggest wind farm operators in Australia. It also owns a gas peaking plant in New South Wales and a 25 megawatt big battery plant at Lake Bonnie, which is in South Australia. AC, or at least the unit of Ayala Corporation, has a 12.8% interest in Infigen already, and it's actually now currently doing a tender offer. It said that this will be crucial to AC Energy's expansion, at least regionally. Now, UAC already owns a suite of renewable assets in Australia and said that now this move actually has the support of Infigen security holders. Infigen has yet to respond to this offer. Now, not surprisingly, let's take a quick peek at my terminal here, and whether we can see the gains of Infigen continuing, because you can see on my screens here show three share prices. You've got AC Energy on the AC Ayala Corporation. So that is the parent company that does own AC Energy, is actually sliding down a touch. So since this deal had been announced, it's actually been down from market open. It's down by 0.3%, trading at 739 pesos. However, if you take a look at its energy unit, which is ACEPH right now. So they had acquired, of course, the assets of Finma Energy and had changed it into ACE. That is up by 0.9%. But take a look at Infinigen, the Australian company that they are acquiring. That has been up by 35% since it started trading in Australia, of course, earlier than here in the Philippines. So we had already seen that movement. This is very interestingly closing in on the 36% premium that the acquirer had given over its share. So very interesting one to be watching out for here as we open the markets today. Now let's take a quick peek and take a step back and check in on our global equities, because a lot have been going on globally here. You actually are seeing a generally healthy rally going on across the globe. You have the S&P 500 actually closing in on its highest since early March yesterday. Energy shares had staged a rebound. You actually had crude oil. It's now closing in at $40 a barrel after hitting negative $40 in the month of March. And you've also got European equities. You can see that EMEA on my screens here. The Euro stocks up by 2.6% yesterday. So European shares climbing to a 12-week high. That's as Chancellor Angela Merkel of Germany sought to thrash out another aid package for Germany. So a lot of things going on. Lockdowns being lifted globally, and we are also joining the rest of Asia. You can see here on my screens how Asia is opening again, extending those gains. It was a very good day. It's been a very good week all across the globe. Asia is no exception. You can see Japan trading in the green, up by 1.4%. But even over in Hong Kong, where there's a lot of unrest, it's still trading in the green. So investors still picking up those stocks. And as I mentioned, our local boards also joining in on that rally. We are at 6,078.61. That's extending our gains over since Friday. We are now up by 0.9%. So it's just been a really fun uphill climb. Let's say we broke through 6,000 levels yesterday. And also that this yesterday was actually the fifth straight day of a rally. That's the longest rally we have seen in 1 year, the best rally we've seen since the month of March. Recall that, before all of these lockdown woes, we were actually trading at 6,300 levels on the month of March. We then fell to a historic low of 4,623 on March 19, and we've since gotten back on track. Now we've actually gained around 10% in 5 days. So that's the steepest advance, and we're actually been the best performing in Asia in the past 5 days. Now, according to AB Capital's Lexter Azurin, it's really just because we had not returned to the pre-COVID levels compared to the other indices in Asia. So he did mention it's just because of this lockdown being lifted that's driving the sentiment of the market. Nevertheless, if you actually take a look at our PE valuations here, and I'm going to just pull that out for you here, we're actually finally trading back at close to 15 times forward PE. So we dropped even below 12 times PE. You can see that V drop there, and we're actually trading the highest in terms of PE since January 17, which was just 2 weeks before we saw that first confirmed case of COVID-19 here in our country. So Luis Limlingan of Regina Capital says a lot of potential for an economic rebound, and also very strong turnovers yesterday that grew to 7.3 billion pesos worth of trades. Another thing to be excited about are the net foreign buying. So foreigners coming back, and you can see those three bars of green towards the right end of my screen here, this is what Diversified Securities says, Aniceto Pangan says, is lifting our sentiment. We had seen nearly 50 days of a record exodus of foreign funds leaving our bourse, and we actually saw 1.13 billion net in buy-in yesterday. Now, PNB's head of research, Alvin Arogo, is saying that this can actually be a catalyst for a bull case. There's actually a bull target from PNB, their local house, of 66.72. So you might be seeing that, but he also does warn there's still a lot of risks on the table. Now, just one thing to be checking in on, before we move on to other headlines, is San Miguel. This after, of course, Artugade, who heads the transport department, is saying that despite the lengthy delays in the groundbreaking of the Bulacan airport, that's still a go, that will still be pushing through. There's still no schedule on that, but at least he is assuring people that there will be a San Miguel-led airport sometime soon. You can see San Miguel opening up by 3 4/10% to 99 pesos and 90 centavos. More on markets later on in the broadcast with AAA Equities head of research, Chris Mangun. Checking in on the headlines this morning, increased poverty in urban areas is not seen to last. This is according to NEDA chief Carl Kendrick Chua, who believes it is the countryside that represents longer-term problems. Chua says the bulk of poverty is in the farmlands and in less developed provinces, those that are hardly affected by the virus. Now, based on a NEDA survey, Chua noted that a third of farmers based on the countryside were unable to sell their produce due to gaps in the supply chain. The report noted that it is the upper and middle income classes that were directly affected, since they are the ones who actually travel. Another point Chua made is that inflation rate had been relatively low and stable in March and April, showing little impact on the poor households. The central bank, meanwhile, sees a slight uptick in May inflation. We will be seeing the actual print on Friday, June 5th. Chua says, aside from the cash subsidy program, the government is exploring other ways to allow voluntary reductions in wages, unemployment insurance, and a pension portability system. The Philippine Economic Zone Authority, or PSEi, seeks to retain the so-called status quo for export-oriented companies. PSEi Director General Charito Plaza said that keeping some incentives for export-oriented companies under the Corporate Recovery and Tax Incentives for Enterprises Act, or CREATE, may retain current investors and attract new businesses. She added that CREATE bill should only be applied to domestic enterprises and MSMEs, as they will benefit from the reduced corporate income tax and first-time incentives. House Ways and Means Committee Chair Joey Salceda said PSEi's proposal posed another potential delay for the CREATE bill. He backed the current version of the tax reform, which reduces corporate income tax from 30% to 25% by July. Meanwhile, Phil Guarantee wants to give 50% guarantee cover on loans taken out by 12,000 MSMEs affected by the COVID-19 crisis. The Finance Department said Phil Guarantee has approved the credit guarantee scheme valued at around 120 billion pesos. This scheme offers guarantees to encourage institutions to lend to small businesses seeking working capital. Phil Guarantee will also charge a 1% annual guarantee fee, but it will waive the origination fees. Eligible lenders under the scheme are universal, commercial, thrift, and rural banks, as well as other financial institutions supervised by the Bangko Sentral. Demand for cleaning and disinfection services is on the rise as businesses and work resume after more than 2 months of a strict lockdown measure. However, this puts pressure on the stocks of imported decontamination technology that is now facing a global shortage. Disinfection and Waste Management Company DNG Pacific said they are actually experiencing a 25 to 30% rise in demand for disinfection services since the COVID-19 pandemic began. The company cleaning service operations among restaurants fell at the start of the lockdown, but the growing demand from other industries was able to offset these losses. Now, these include hotels and even car manufacturing businesses. Home cleaning service providers also saw more bookings. That's particularly from the condominium residents. Some businesses are also making the shift to the sanitation industry to stay relevant while the health crisis is still ongoing. Currently, there are calls to step up regulation that will help penalize people selling fake products which are used for disinfection. Health experts also say the effectiveness of disinfection like misting against COVID-19 is still being studied. Well, he predicted it a couple of days ago that if we were to break 5,900 resistance level, we may well be on our way towards an extended rally. Here we are right now. Let's talk more about that with AAA Equities' Chris Mangun. Hi, Chris.
Hi, good morning, Danny. Thanks for having me back.
Okay, so it's been a while, and the last time we've had you together, there was almost, no case for optimism here. And you had mentioned, let's not be catching falling knives. It was anyone's guess what was going to happen. This was way before the lockdown happened, and here we are, lockdowns lifted. Maybe no longer catching falling knives. What's your take on the index situation right now, reaching the 6,000 mark?
Yeah, like you said earlier, I think the recent rally is just the Philippines catching up with the rest of its peers. Philippine market has always been conservative. U.S. markets have rallied. U.S. markets and Asian markets in general have rallied tremendously since crashing because of this COVID-19 pandemic. Investors are still expecting this V-shaped recovery, and we're seeing more optimism. So investors are gaining more optimism by the day. We recently broke above that 5950 resistance level, but like I said, it's just catching up to the rest of markets globally. I think we're still going to see a pullback pretty soon. But so far, there's been a lot of money that's been made because of this recent rally.
Okay, but do you think that this rally still has a way to go? You said that it's sentiment driven, but is there actually some legs here? Of course, we are also on the back of a lot of global issues, and it's not just the Philippines that's possibly doing better, but you've actually got China manufacturing doing quite a bit better. US as well. There was an index that was released. It seemed to be getting on track. So is there some case for actually, a global resurgence of the global economy, which might be spilling over as well here?
Absolutely. I think once all these headwinds I mean, the main concern right now is the COVID pandemic, but so far it looks like we've seen the worst of it. Investors are less fearful now than they were a month ago. I think most expected a recovery sooner than what we're seeing, but investors are incredibly optimistic right now. There's a lot of people want to make money, and the recent government stimulus that we've been seeing all over the world has really helped this case. That's really driven optimism and has caused investors to look for undervalued shares, and that's why we're seeing this rally. Now, then again, I think the rally is still premature because when you look at the first quarter numbers, I think everybody is expecting worse second quarter numbers. I think second quarter numbers are going to be worse than expectations, and because of that, investors are going to use that opportunity to take profits. So I think the recent rally is good for the market, but it's
Okay.
still temporary. I'm not convinced that it's going to go all the way right now.
Okay, but can you at least say, and you can see in my terminal here, the 12-month forward PEs, can you at least say we've hit the bottom, and the worst is over? I mean, maybe we might not be rallying to the levels that we had seen, just a couple of years earlier, but at least for 2020, can you say that that level of 4,000 something is something of the past?
Well, yeah, from the looks of it right now, it looks like it's bottomed out, but there's still a lot of uncertainty right now. Investors are still looking at a second wave. There's still the potential of a second wave of this COVID-19 pandemic. There's still a lot of uncertainty. They still don't quite understand how exactly this virus works. I mean, there's still new symptoms coming day by day. I mean, in the last few weeks, they've looked at different symptoms in children. They still don't have the science behind it exact. So there's still a lot of uncertainty. But so far, it looks like the market has bottomed out and recovered quickly. The recovery on it is more impressive than what the pandemic has done to the market. I mean, that V-shaped recovery is just incredible. Honestly, I wasn't able to ride this recovery as much as
Yeah.
I wanted because I still had a lot of I still had a lot of doubts at that time. Anything could happen. So uh, I think it could come. I'm pretty sure it will come down. It may come down some more in the following weeks or in the following months. But overall, I mean, we've seen the bottom on this in terms of the fundamentals. You know me, Danny. I don't have any advice for the fund managers of the world. My target audience is retail investors who trade on the technicals and price action. And so far, we've seen the bottom.
Okay, so that's something good to note. And another thing, that might add to that optimism is the fact that investors are coming back in from the foreign investors. I mean, so this rally, if you could call it a rally, has been staged by mostly domestic investors still keeping the faith in our local bourse amid an exodus of foreign funds. So, to what extent are you seeing that foreign funds can actually be the catalyst to keep this rally going, especially if you compare it to other markets right now? Are we still undervalued, attractive compared to other countries? There were, some analysts have said still we're better off because we still have space to cut rates, for example. And, we don't have all of this geopolitical tensions as in Hong Kong or what's going on in the US. And there's still some case for the Philippines. Tell us more about your thoughts on that.
Yeah, long term, you know me, Danny. Long term, I still believe in the Philippine economy. It is a great. We are going to see enormous growth. You just look at our currency. We have the strongest currency
True.
in all the EMs. I mean, that tells you that our government has got its financials really tight. Uh, they have been conservative in its efforts in terms of stimulus on handling the pandemic. Some have criticized that the government has not spent enough, but our government economic team has always been conservative, and because of that, it has kept our financials strong, and that strength will will be used once the economy comes back. Once the economy comes back, we will have a stronger economy than most, and I think that's something to look forward to. You look at the S&P; they maintained their BBB uh, stable outlook on the Philippines because of our strong financials. Our GIRs were rising. We did
Okay.
see debt increase a little, like you have said earlier, but I think our economy is extremely resilient, and moving forward, I think there's still a lot of growth there, even for our market.
Okay, just last question on the economy since you brought it up. Is there a disconnect that you see between the market movement and the economy, or is the markets really reflecting the pain that we might be seeing in the economy, especially since you're still rather optimistic on us bouncing back?
Yes, there is a disconnect, and like I said, our market is even more conservative than our economy. Our market has been investors in the market have always jumped at the last second, but
Okay.
everybody's careful about jumping too soon, and that's why if you look at the rally in the last 4 or 5 days, we've only seen this huge pickup in volume in the last week, but 2, 3, 4 weeks ago, volumes have already tapered off. I think investors waited to the last second, especially those that followed that MSCI index funds. They waited to the last day before jumping in, and the
Right.
that's what caused the spike in those big large share issues like AC and SM. They all came in at the last day because our investors in the market are conservative, and that's not necessarily a bad thing. I think that's a good thing. There's still a lot of uncertainty, so we really can't fault investors. But I think in the third quarter, we're going to see a massive recovery of our economy, a massive boom. And before we get there, I think we're going to see that market rally.
Okay, so third quarter for you, as early as the third quarter, you're going to be seeing a massive boom. Now, your picks are actually retail, and that's very interesting. So you can see in our terminal here, of course, Pure Gold. You mentioned that on the one hand, that was also added to the MSCI index, so a lot of flows there. But also, they did have a pretty good first quarter. But we did talk off cam, and you said that that was actually lower than what you were expecting. So why do you see a strong recovery if you base the numbers on the first quarter earnings, not just of Pure Gold, but other retailers, Robinsons or Shakey's as well, had disappointed some analysts?
Yeah, well, the Philippine economy has always been consumer based. Filipinos always spend, and it's what kept our economy growing, and it's what kept our economy strong. And the reason why retail is the pick, because we're going to see a faster recovery in this sector more than anything else.
Okay.
And like we talked about earlier, Pure Gold earnings in the first quarter was not necessarily disappointing, but below estimates. Because if you look at the Philippine Consumer Index, I mean, if you look at consumer spending in the first quarter, it almost doubled from a year ago. So Filipinos spent double what they usually do in the first
Right.
quarter, and that that only included 2 weeks of the actual lockdowns where people started hoarding commodities. But we also saw the Taal catastrophe in early in the first quarter, that also triggered more consumer spending. People donating and hoarding goods as well. Really, Pure Gold was one of the main beneficiaries. So I mean, even in my personal experience in the last few months, all of my money has gone to Pure Gold SNR grocery shopping. No more eating out at restaurants. I can't even get a haircut. So yeah, I think second quarter. I think in the second quarter, earnings are gonna uh, are gonna
Reflect
impress.
that.
I think it's gonna be over most estimates in the second quarter. So it may have underperformed in the first quarter, but the second quarter
Okay.
I'm banking on even better numbers.
Okay,
Like
so
you said,
even more
Shakey's. Yeah,
spending on supermarket during the lockdown, and that's going to be reflected in the second quarter. Chris, I need to talk about the AC deal. Of course, buying Infigen. What is going on here? They have money to they've been using redirecting their capex, so to speak. So they halted some stuff in Ayala Land, for example. And they've cut their capex significantly, but they're still doing deals. Does the market appreciate this? And especially since this is a offshore cross-border renewable energy deal, and when you talk about renewable energy, it takes quite a while to get back that huge investment.
well, this is Ayala telling everybody that they are serious in going into the renewable energy sector. They have had massive investments in this sector in the last couple of years. We're going to see more of these renewable energy investments. I mean, they think they're basically telling everyone that this is the future. They are going all in on renewable energy, basically. And this acquisition of Australian Infigen will add to their expertise, since they're basically generating wind power. Ayala has set its intention to do wind, some solar, and this is going to add to their expertise because of Infigen's track record. I think they are going to get that bid. They paid a premium for it. Shares of Infigen were trading at, I think, 50 cents, 50 cents a few weeks ago, and
It's
it
now
jumped to 80.
80 cents.
Yeah,
Yeah.
because of the tender of UAC. Uh, I think this is going to be a good sector for them, for Ayala in general, and having one of the highest, even on the Philippine economy, having one of the highest electricity rates in the world is also not too bad for the company. That means that there's a lot of growth in that area, in that sector, and we'll see how Ayala performs in the next 5 to 10 years.
Okay, so exciting for Ayala. Last one before I let you go. We have a minute here to air. Mary Mart. What's your thoughts on that pricing of this and this whole ambitious strategy from going from 7 stores right now to 23 on October? So 2020, they're banking on that. They said that they're banking on the fact that, rentals will be much cheaper. There's going to be a pool of talent after this pandemic, settles down. How optimistic are you in Japsia?
Well, I was at their analyst briefing, and they are extremely optimistic on this Mary Mart, this business model in general. Uh, Injap, their family business was a supermarket in Rojas City 20, 30 years ago, and he worked at his mom and his mother and father's grocery store when he was 15, 16 years old. So I think
Okay.
I'm backing that they know what they're gonna do in this sector. They're gonna try to use the same business model as Mang Inasal, where they franchise out most of their locations. 90% of their locations, of the Mermart locations, are gonna be franchised. So
Okay.
I think uh, I think the timing of this IPO, at the beginning I wasn't quite sure because of market conditions. But like you said, if they get that money right now, they're gonna have a huge uh, what do you call this? They're gonna have a huge war chest,
You're
and they
right.
will be able to do good things with those funds. So yeah, I think investors are also quite optimistic. The offer was oversubscribed. Uh, our allocation is already gone, so I think there's a
Wow.
lot of optimism here. I hope it can draw some of the I hope it can draw some of the momentum of the recent moves in grocery operators like Pure Gold, RHI. Plus, it's a 1 peso stock. Fundamentally, they're saying it's overpriced. I think it's
Okay.
something like over 100 times earnings. But market's really driven by sentiment right now. So if they can execute this properly within the next 6 months, I think that's going to be a big winner. They really want
Exciting.
a large market share of the grocery space. So we'll see what happens.
Okay, so Mary Mart, actually one of your picks, that was Chris Mangun, AAA Equities. Thanks for joining us, Chris. And that's a first look into the business day. Today is Wednesday, June 3rd, 2020. Catch us again tomorrow morning, 10:30 a.m. I'm Danny Laurel, and we are One News.